Most people say you can't time the market. I say you have to. I'm Scott Redler, Chief Strategic Officer for T3 Live. I would like to invite you to an exclusive swing trading event in Newport Beach, California on Saturday, February 23rd. Students will learn the 5 keys to becoming a successful swing trader and how to navigate the market using what I call a portfolio approach when it's conducive in the market. Reserve your seat at t3live.com or call our toll-free number 1-888-99-T3-LIVE. Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today, finally, a poding down day. All those bears for the last 2 months have been calling the top. You know what? You finally got rewarded today. Good job. Well, do you really think you did a good job? Did you miss out on a nice move over since just say even 2013, where we went up probably 60, 70 handles with multiple breakouts with a lot of tradable action? So are you really thinking that you did the right thing? At this point, if you made some money back, I don't like seeing people in pain or whatnot. All I want to say is, more times than not, you ride a trend and you don't use opinions until it changes. You stay with it, you look for leaders, you use a portfolio approach, you use a tier system, you use a lot of different things that we try and advocate here in order to stay with the move, whether it's with hedges or whatnot. And everyone has different time frames. And just because today we had our first engulfing down day, it doesn't mean it's going to start a new downtrend. But I think early in the day on the VTF, a lot of guys were talking and we were saying today smells a little funny. It feels like we should be down a lot more. Maybe as soon as the minutes come out, that's what the market's being propped up for. And then maybe they throw in the towel, so to speak. So I think there was really nice communication on the virtual trade floor. You guys saw some longs get stopped out. You heard us talk about adding to some of our hedges. You even saw Sperling take down a lot of his positions. And now we'll see what happens. And everyone's going to come out and start throwing out their forecasts. I think S&P is going down to 1,500. I think it's going to 1,474. I think we're going to pull back 10%. You know what? Let everyone come out with their projections. What we'll do is we'll put out levels, and then we'll measure the market at those levels. But if you switch gears and get into neutral or neutral to negative, because I think some guys went out net short, I'm actually net short also, you don't have to know where we're going to go. You just test levels and figure it out. And if you look at the chart right here of the spiders, you will see that this ascending channel that we've been riding all the way since the gap and go to start the year, I would say it broke to the downside. I wouldn't say a crazy resolved or resolution to the downside, but what did we do that we've been talking about for a while? The 8-day moving average. We closed decisively through it. I know right here, it seemed like we closed through it also and it led to nothing because we went higher. Here we touched it and it didn't lead to anything. But this time we closed below it on the lows. So right away, let me just show you where the 21-day is. Some guys on the feed who are talking about buying this dip today, and my style is not to just buy on the first poding down day. This is what I call a day to take notice, a day to clean up loose longs and maybe go net short for what could be a few down days to at least a 21-day moving average or to bigger support right around here. But anyway, this is a day to take notice, but this time there are some things different. Okay, what I mean by different is some other sectors that led us up, were allowed to break down a bit more than, the past 6 weeks. So that gave me clues also this morning that I should be adding to my spider hedge, getting out of some loose longs, getting people kind of prepared, because what broke today and didn't get saved? The home builders. Home builders have been a leading sector for the past year and a half, and I'm not saying they're done and they're broken, but if you're an intermediate trend trader, you saw some faulty signals. And if you look at the XHB, you will see that this leading sector, okay, that was also following the 8-day moving average, touched the 21-day here, but bounced off, broke out again. This time, it went below the 8-day and decisively broke the 21-day and this last accelerated uptrend. So with that said, here's the 50-day, and we'll see what happens. So if you had a high-level stop, this was a nice spot to get out of the way and then figure it out. So we'll see if it goes to the 50-day. There's probably another trend in here that we could draw in place. That's a smoother trend for more macro guys, and that comes in like right around here. So we'll see. Maybe it breaks below the 50-day, and we could be buyers at 27. Last time it did the same type of thing. It broke through the 50-day, gave you a reversal pattern, gapped up and went sideways and continued. So we'll see what happens right around here for the home builders. So this broke earlier, and this was a leading group, so that gave you some clues that perhaps the rest of the market could follow. What else broke earlier? MOO, the ags, and this was even weaker. I know the last few days I've been saying if we continue to go, what's the next sector that could break out? But it didn't. So this actually was showing relative weakness because in the last week or so you saw the spiders making highs and this one didn't. So this was one of the the sectors to break down first, and some guys got shorted, and if you did, congratulations. First down day. This is even closer to the 50-day. And a lot of the ags within this group got pretty beat up, and they were pretty damaging. So we'll see what happens tomorrow at this pivot. But here's a 50-day, and here's the gap to start the year. And this, in my opinion, is a weaker group right now, and we'll see where it goes. Again, look where, just say yesterday, the spiders were here at 5-year highs, still trending. And what were the ags doing? Consolidating, putting in some kind of pennant, and it broke to the downside. So we'll see what happens there. So overall, the ags and the home builders, which are sectors that I watch, broke to the downside. And then if you look at the XLF, you'll see the XLF for the first time this year closed below the 8-day moving average. So a good time to sell some of your loose banks after an enormous move. This was the gap to start the year. And look where the 21-day is. Actually, no, this is the 50. So here's your 21-day. So this is a day one. Somebody on the, was saying, I'm buying a bank today in the red. Why today? This is day one potentially. We'll see where, where things are at if we get to the 21-day. This will be a day that I would say you probably want to cover shorts if you shorted today, and then we'll see, what the leaders are doing in order to potentially buy back. But as of right now, this ascending channel is in a bit of jeopardy. Okay, actually, I forgot another weaker group is the OAHs. OAHs, if you guys remember, it actually broke out last Thursday, and then it came in real quick. Remember this trade? This actually was a pretty nice one. And then you had that inside day, and then it looked as if it could be flagging for another move. But high-level flags, which we talk about, add-on trades are always a bit riskier because after a huge move, they're prone to failure. And this one broke to the downside. Now it's coming into support. This one's closer to the 21-day. So I would say be a bit careful. This actually could have the makings of a bit of a head and shoulders pattern, right? If you want to take a look at it this way to see, this being the left shoulder, this being the head, here, somewhat of a neckline. So maybe it comes in, bounces, and then if it makes a right shoulder, this could be a signal that, some lower prices to come. And what could that do? It looks like the measured move would be actually down to this 50-day. So all in all, you can time these markets, Andrew. So if you come back to me, you don't have to cost average into things. You could ride trends. When trends get faulty, you get into neutral. When you get more clarity that perhaps you can get more weakness, you get more net short. And depending on your time frame and how proactive you could be with your accounts, because some of you guys aren't active traders or professional traders, and you maneuver your accounts maybe 6-7 times a year. So right now, one of those times to maybe hedge your portfolio a little bit. I bet you IBD is just going to put us, uptrend under pressure, not market correction, because we're not in market correction yet. But today would probably be market under pressure, and then we'll see what happens the next few days. If there's no follow-through selling to the downside, and we hold in there and it was just a one-day wonder, we could resume. But we don't have to know that yet. So we could wait. We could always put positions back on. But again, day like today, you clean up a little bit. And yesterday was funny. People were, saying, congratulations, Redler. Google's above 800. Congratulations at 804. It's 805. This was your high beta name of the year, starting in 2012. And here it is. And I was like, listen, I'm really not that excited. I'm glad that because sometimes I'm your offensive coordinator. As chief strategic officer, I give offense plays and routes to run and things for everyone to do out there based on their time horizon. But doesn't mean I'm in everything at all times, because I have to be in the media, I have to do morning calls, I have to be with the traders, I have to be a partner, I can do all these things. So my bandwidth sometimes isn't so thick that I could be in as many things as I want. So I pick and choose my battles because I tend to be singles double hitter. And this whole trend, was another, growing experience for me also, where at the peak I had 15 longs, when we were breaking above 1474, and now I'm down to like 4 or 5, and I overlaid my spider short. But anyway, with Google, I'm like, the time to be excited was in the base. The time to be excited was if you were a macro investor at 660. The time to be excited as an intermediate trend trader if you bought after the gap up after earnings, which was right around here. Okay, remember, well, a lot of guys actually bought over here before earnings, and that was when we broke this mini, downtrend. And then if you didn't take it into earnings, because that's not what you do, if you bought after the gap up because this never got filled, congratulations as it crossed above 800. You always want to trim and trail when you get to these psychological levels. And then what did it do today? Not blaring. Okay, it's not game over, but it did a little bit of a push through failure, and engulfed the breakout move, and we're above the 8 and the 21. People like, should we be buying Google yet? Let's see how it handles the 8-day. Maybe if it holds the 8-day and we see some kind of red dog reversal through today's low tomorrow, maybe you buy it, it goes sideways and continues. But again, you never chase a stock that's being spoken about in the media 100 times because of a key level, especially after a really nice move. But anyway, so entries and exits matter, and that's what we talk about. As far as Apple, my day started out pretty stressful because I actually took Apple home with me long because it had a mini reversal yesterday. I didn't have a lot, but it still was annoying seeing it down $7-8. So I said to myself, am I going to be stubborn and just continue to buy it because it's Apple, which we haven't been doing since the decline from 700? Or am I going to say, you know what, give it a little time. Maybe that Foxconn news was overly dramatic. It looked like people wanted to sell it anyway because every time they did a reprieve saying that it's not because of iPhone 5 demand, it's because of the Chinese New Year or whatever, it just didn't rally. So I said I'm going to give it to yesterday's low, or I think I might have even got out a little bit before then, and then I didn't touch it again the rest of the day. Said I don't care, And lately we've been trading it less because it hasn't given you great setups except for the week and a half ago when it went from like 448 to 485. So anyway, with Apple, this was remember this has been the downtrend that's been controlling the stock since 700. Lots of areas where you could have gotten out and not be stubborn. This head and shoulders top up here, or when it broke the 21-day, remember we're like, if it breaks the 21-day, it'll test the 50. It tested the 50, had a feeble bounce, and then broke, and then all the way down. This was your last tradable bounce. You had your red dog reversal, your gap up. It held higher, went into resistance, and then broke this level and failed and said no commitment here. And then it's tried it a few times along the way. And then down here, with the shareholder meeting and everything going on with iHorn, it was worth a try. And we had a nice little move, a week or so ago. And then, we were talking about if this is going to have any commitment, it probably should hold 463. And then what happened on Friday? It broke below it and, kind of got a lot of guys out of it. So then yesterday was worth a try when it reversed somewhat because this was like the last thread for Apple. In my opinion, remember we were showing it yesterday. I'm like, okay, this is the last thread that Apple could hold. Look at this, minor trend line here. Maybe here's a low, a higher low, and perhaps it wants to break this to the upside. Well, you know what? It gapped down, traded through yesterday's low, closing the dead lows. I have no position, and it looks pretty damn gross. We'll see what happens if it comes to this support or this one, or I don't know, maybe we get some kind of pivot reversal for cash flow. But all I'm doing here is looking for cash flow, and maybe at some point, I don't know when, I don't know what it's going to take. This huge descending channel that it's been trapped by, we break above and it changes. And that could be all the way down. Who knows? This thing could keep going. So we'll see what happens. Fibonacci Queen yesterday in here said it's going to break the lows and go to 420-ish. We shall see. As far as another trade, which is another good tactic to show you, is Amazon. Amazon, it came in long with a bunch of other positions, and your momentum trade was if it traded above 270.50 to continue, which it did. But if it doesn't stay above there, you get rid of your momentum shares, okay, because the momentum left, and hopefully you trimmed and trailed it, because we talked about it on the VTF, and I even think I tweeted about it, saying I just sold some, time to buy it was 270.50, time to sell some was 272, whatever. But then, once it pushes through a level and can't hold it, it creates that topping tail, which could have also got you out of, your swing trade, so to speak, if you were treating it as a swing trade. So you look at Amazon, here you go. This is, getting very choppy. Here was this, descending channel here, or trend that ignited. Remember, after first it tried to break below the 50 and it couldn't. All right, then it held it right around here, okay? And then that's when I was long Amazon yesterday. I added through 270.50, sold some, that's the trim and trail. And then once it went back below 270 and created a topping tail, you could have got flat. You probably saw it leave my virtual trade floor around 272-ish, which I think a lot of guys did. If you're on Twitter, it's a different story. You're not a full-time VTF or T3 Live subscriber, which maybe you should subscribe. Anyway, this was a sell signal. Now we'll see what it leads to. If it holds support, maybe it'll go sideways and go again. But to me, that was a great day and a half strategy. And sometimes in different types of markets, if you know your time frame, you just use day and a half strategies. Unless you're holding Amazon for a few years, and then you don't care about what I'm talking about right now. You're in it, and you're fine. You have a lot of gains, and hopefully maybe you lock some in, because a lot of people who said the same thing for Apple wound up scratching their head now and say, oh, what do? I did have all those gains. I should have had a collar on, or I should have sold some calls and bought some puts, or just sold some stock. But anyway, this right here still looks fine for me. It was just an intermediate strategy, and it wound up not holding. If it held above 270 and the market to me wasn't toppy and all those other signs weren't coming into play, I probably would have stayed, but I wanted to take some positions off. And you want to look at it from a more macro stance, I guess. Here is a trend that's in play, and I would say if you're more of an intermediate guy and you're still holding it, if it starts to break below this little flag, I would just be a bit careful, because what you have here now is, here's your high that got rejected at, and here's a lower high, so we'll see what happens right around there. All right, with that said, also gold had follow through selling to the downside. Remember that wedge? Remember the triangle that I was actually long and I was wrong? I thought it was going to break above 163, and it didn't. So I got out of my long and I didn't flip short, which probably would have been a good idea. And then it resolved to the downside, showing you didn't need to pick a direction. And maybe if I didn't pick a direction, I would have picked it after it showed its face. And that was right here, okay, with the wedge pattern that we had, where you had, again, another descending channel, okay, and then it came into an apex, which became very exciting. But what did it do? It broke to the downside. Okay, so hopefully you stopped yourself out, or you put on some hedges if you're a macro guy. Because now, if you're a macro guy, I think you gotta look a little closer, guys. If you're a gold bug and you're thinking that it could do no wrong, well, here's a really key area that you're coming into. So if you just shorted it from an intermediate stance, perhaps you're covering it to here, and then as a macro investor, you want to see this hold. Because if this doesn't hold, or if you don't get any kind of bounce that's not feeble, it breaks this 148, 150, your next level doesn't come until 140, and why ride it down when you could maneuver it a little bit better? So with all that said, there's still a lot going on. You just got to know your time frame. You have to know where you live, know what time frame and how you want to approach it. For me, intermediate time frames. I've been in portfolio approach since Thanksgiving, going from about 4 longs, 1 short, to as high as 15 longs with 1 short. Today, I leave with, I think, 4 longs with a little bit heavier on the short side. And today, intraday, I was probably tier 3 short the spiders and a little nervous, but I wound up, working out. And now I'm back to something a little bit more comfortable. So it shows you can time the market, you can maneuver the market, you can learn how to approach the market. You just got to put the time in. And if you're watching this video and you're putting the time in, because why else would you want to look at me and listen to me? I wouldn't want to do it. Anyway, congratulations for making the progress. And if you rode the trend and you went into more neutral today, and we don't go lower, big deal. You took some profits, and you don't go poor by booking some trades. And all those bears that said, oh, you're going to get yours, you can't get yours if your money's in the bank. Otherwise, they have to come rob you and they go to jail. So trim and trail, my friends, and monitor the action, and we'll figure out what the next move is, and we'll map out levels, and we'll let the market confirm those areas to see what type of action we should do. Have a great night. See you in the morning.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.